Good evening. This is the Elliott Wave update for the NASDAQ 100 for Sunday, October 17th, 2021. The start of the Globex session, we saw higher prices, and it really felt more in tune with my current expectations, and that I felt that the NASDAQ should easily reach 15,206. That remains the case, even though we have now dropped, let's see, what's that high? 63, we've dropped about 50 points. And let me just jump right into what I feel is going on. And that the count thus far remains the same, and that I'm still now just looking for a C wave, but to complete a minor wave two. So the S&P is at much closer at actually turning the count into what this would be an ABC of what degree to be determined, but it would be a C wave. We'd still be involved with a B wave, but that B wave would likely have already gotten above 15,400, which the S&P can do tomorrow for that matter. And it did quite the climb on Friday. They could definitely do it again tomorrow. So if it does, and it can get itself above there, then we are then looking for much higher levels and the possibility of new all-time highs. But at least it opens a door for the market to get 15,446, 15,500, 56, 15,600-ish. It definitely opens this level up if it can get above there. And can the market do it? Absolutely. We're just beginning to enter into the stronger week for earnings reports. And so we still have not heard from Apple. We need to hear from Amazon. We need to hear from Salesforce, PayPal, Facebook, Google, Intel, Microsoft, Netflix, NVIDIA, Tesla. There's still a lot of huge, Moderna, all of them are still out there waiting to, of course, to report. So I don't necessarily see that the NASDAQ, without any major news that's going to smack them down, I don't see them really dropping this strongly. Like we're going to have a down 500 day. Can it happen? Yes, anything can happen. If I'm expecting it to go up 300, it certainly can drop 500. So, but I'm not seeing it. So I do think we still have upside. The way I am still looking at it, if it's a C wave, it's going to be 5 waves, and I have wave 1. So the C wave has 5 waves within it. So that's 1 of C, 2 of C, 3 of C I've put here, and then the 4 of C I put at the low. And what it could actually turn out being is that we have wave 1, wave 2, wave 3 gets pushed up to this high that we made during Globex opening at 15,163. And then we're just now putting in this 4th wave, and we still have a 5th wave to go. And that 5th wave can subdivide. Right now, I'm looking at the 3rd has, but the 5th can also subdivide. I'm seeing that more on the lower level, and more now that we are algorithmically controlled. And Elliott wrote his thesis back in the 30s and 40s, the 1930s and 40s, which we may have to elaborate, not but expand, in that Elliott said that between waves 1, 3, and 5, one of them will extend and create its own 5-wave structure inside this additional 5-wave structure it's making. So in this 3rd, we would look for it in the 3rd, right? So the 3rd wave, it gets a 3rd and it subdivides. But now I'm thinking in the 5th, it can also do it. So I'm seeing that more frequently now than Elliott ever did. So I still can expect that wave 3 will be the longest and the strongest, and it still would be, but wave 5 could break into its own 5 waves as it goes up. So again, we're just going down degrees. And then within its 3rd, it really starts to power again. And that's why I think we have to leave open the potential that it could break above 15,400. And then that just changes our count around, and it just allows for this B wave to continue. Does not necessarily have to go to new all-time highs. We can get dang close though. And then we do still a very crushing C wave down. When that begins, how it all begins, who knows? I'm going to allow the market to tell me. So essentially, we continue to trade smart. And what I mean by that is that I don't think that it's a good idea to necessarily take any particular move that it has to do it. This is what you said, that's where it has to go. I don't get married to either side, right? I believe that we need to continue to trade smart. And what I say about trade smart is you have to stay open so that you're able to trade both sides. The volatility has increased and it's been very evident in the upside moves, but it's also increased on the downside moves, particularly when we're trading in between this 4-hour bar. So this is the 4-hour bar that our chart that continues to really lean on me that we still have more upside to come. I'm going to drop it down to the hourly real quick, and then you're going to see that that's still, those are very, very nice, beautiful bars that, you know, hourly bars up. So that volatility remains, but you can see that the sell that came on during Friday's session, it had the same volatility. Then the other volatility peaked up. And now again, we're seeing some volatility again to the downside. The NASDAQ's dropped $50 off of the early high. That's pretty good volatility. That's very tradable, very playable. Why not stay open to it? But I'm not going to get married that this market just continues to drop. Can it? Yes. But I'm going to let it tell me. Because if it decides to hold this 4 and 8 there, okay, then it's going to go back up. So do I want to hold on? Then I'm going to look for position because I think it's going to break down all this. No, I want to trade. I don't need to sit with a position that could go against me unless I shorted it at 145, and then I can put my stop in, give it some room. But if not, then I want to be able to trade. So that's going to be what I'm basically kind of saying that we need to pay attention to, and so that we don't get married to either side. We're staying open to the trades. Upside remains a very potent possibility. Again, based on, I don't think traders are going to be too willing to drop this thing without news to drive it there, that they're just going to choose it. Okay, we're just going to start selling. But if you were to ask me, can that happen though? I would say, of course it can. But you're going to know it and you're going to be able to trade it. But I'm not going to get married to that position, because if the volatility is high on both sides, it can turn and go back the other way just as quick as it went down, and vice versa. So that's what I'm saying. According to the volatility, I'm not going to get married to either trade, but I definitely want to participate. And that is the difference. I don't need to sit and wait because I'm stuck in a position that I thought should continue and it didn't. I'm not going to sit with a long position as this thing drops $50. That's a lot of money to put on the line, because I can't say with 100% certainty that it's going to stop and go back up. Just like I can't say with 100% certainty it's going to stop and continue to go lower. You have to trade smart. Don't get married to a position. That's my point today. We have potential of both directions. We have plenty of reality that can get put back into this market very quickly that would drive prices in either direction. Support to the buy side is going to come that somebody blows the doors off of earnings. One of the bigger players blows the doors off of earnings, produces an atmosphere like we're all going to go. And that can very well happen. Or one of those same companies blows the doors down in terms of, you're not blowing the doors off, you disappointed massively. You blew the doors off of disappointment, and this market starts to head lower. So again, earnings, I think, are what's going to be in control right now. And that's what, not that I'm going to hedge or hinge any trading decisions on it, but certainly if it's going to create a move, you're going to want to be there. Fortunately, a lot of that happens after the markets are closed. You know, it's still tradable, but it's not that it's going to come during the trading day. It comes after the market closes. So in any case, let's trade smart. We have both possibilities. And I'm going to take it back out to this, at least the hourly chart. We need to bear in mind, a break to 15,206 should definitely still be in the picture, for sure. And the market can do that easily tomorrow, easily. We're still sitting 15,113. Can it get to 206? Yeah, pretty easy. Can it get up here? Yeah, it can. Can it get down here? Sure can. So trade smart, trade according to your moving averages. Use the Elliott, use the Fibonacci. But you can do intraday Fibonacci to give you additional support or resistance points on your lower time frame charts. This is an hourly chart. I'm not going to trade off of that. I'm going to trade off my lower one. I'll trade off of the 5. And look at those beautiful moves. That's what I'm talking about. You look at the hourly, didn't look like all that much. Look at this. You've got 149, got down to 131, 18 bucks. I love it. I'll play it. And then we get rallies. Sure. Starts at 111, gets up to 117, 6 months. Sure, you're going to want to play it. Maybe not as tight. This looks like 3 waves, A, B, and C. Maybe we come back down, put a new low, and maybe we do head down to the 200. That's on a 5-minute chart. We've already broken below the 50. We've broken below the 20. That produced our acceleration. See how it all builds? See how it all fits in? This is what you can expect. We're not doing it on those upper level, you know, those little bit longer, the 30, the 60, the hourly, excuse me, the 4 hour. We're not seeing this type of move because it hasn't breaking those yet. We're getting ready to, but then again, if we break the 200, we're likely breaking the 20 to 50 on one of those higher time frames. And we're going to get the same acceleration. So that's what I'm talking about. Trade smart. You can participate in this. You don't have to get married. Sit this out. Or if you're sitting it in now, fine. Your stop is got to be the 20. Break above the 20 was going to show this boost back up again. Same situation. Downside, yep, you're going to get it. If it breaks back up, it's going to trigger more buys. That's the game. So be open for it. Trade smart. I do suspect, yeah, we could get down to here. We may even sink a little bit further, but I would still look for higher patterns because again, if I'm just moving this 3 up to here, then what we are looking for is an ABC. And if this is going to be wave A, then we get a B and we get a C. And it would just be a 4th wave, maybe similar looking as that. Okay. In fact, that's where we expect it to go, right? 4th wave of 1 lesser degree. If this goes to 3, that's going to be 1 lesser degree. And then we're looking for that drop to bring us back to there. That's still about 15,000. It's 15,036. If, let the market tell us, but we can project out once we have the information. Okay. All of that is kind of what I do in the trade room. We're talking on a 5-minute basis. I will talk it through in the trade room as well. If you have an interest, send me an email. Get in contact with me. Leave me a comment. I'll get in touch with you. I'll tell you how to join and what to expect. Okay, I'm leaving it right there. We got both plays in play. We're going to be day trading tomorrow. We're going to be looking at these individual bars. We're going to be trying to capture both upside and downside as the market dictates. I wish everybody a very good trading day. Again, trade smart, use your moving averages, use the Elliott, use the Fibonacci, help guide your trades. Next update, Monday the 18th.